All right, legends. We are breaking out. We are pumping. Is this pump legit? Are we going to go to $60,000 plus? Let me know right away in the comment section, guys. If you do believe so, let me go through the comment section, say hello to the beautiful community. We are breaking out from this level. However, there's hardly any volume at all. Will we manage to reject from this crucial pivot point? I am attempting this swing short position exactly at this level, guys. We are at the level that was mentioned in today's video update. So yes, without a doubt, I am attempting this rejection at this level, maintaining good risk management. Of course, we can speculate on some scalp long positions to take those highs as well, because we are forming some pretty aggressive bullish CBD divergence, right? Respect the pump. If you're scalping, scalp longs to take the highs are in your advantage with this massive pump. Respect the pump. If you are forming some bullish CBD divergence locally, you want to speculate on those highs to be taken. This is why it is also a good idea to look for some scalp long positions to take the highs. But overall, I am looking for this level for a swing short position. I am in a swing short position with stop loss above the highs. And yeah, basically you need to attempt this, this position. We could take the highs, reject again. The risk to reward ratio is absolutely insane. So it's worth having some tight little stop losses if we do get a reaction from this level, because this is a zone where it could either just continue to the upside, okay, with a big massive blast off, then we just get stopped out, and it is what it is, right? If you manage risk, who cares losing a little bit of peanuts, right? Because the projection of this move, it would be rejecting here and coming back down to sweep up the lows from the last few days. However, we are hitting the level. We more locally on the lower time frames, we are forming incredible. People want to short this level, guys. We can see it on the data. This is why you need to respect the pump. If you are forming these bullish formations, right, these bullish kind of pennants, and on the higher lows, you are basically forming, and let me know, guys, if you can hear me, okay? Just want to go quickly through what we are talking about here. If you are forming higher lows, and on the CBD, you're forming just very aggressive lower lows here, and we are just about to form bearish CBD divergence in the blue. As you can see, we're just about to form higher highs right there. So it's a constant battle of people wanting to short here, people longing here in other exchanges. So we're having a bit of a fight of divergence, but overall, you want to follow the momentum. If you get those bullish CBD divergence, you have invalidation, you want to respect the pump, you want to get into local scalp long positions to basically claim those local highs. They're small little movements of a few $100s, so you need to go a little bit high with leverage, obviously, or a little bit with capital, because, well, leverage or capital doesn't really matter. Always maintaining that risk of 1%, 0.5, 1, 2% approximately max. Okay, you don't want to start dancing, fiddling around with 5-10% of your capital for your invalidation points, because that is obviously too much. Small positions, small profits, and that's how we do it, right? So overall, there's a little bit of a battle right now. There is a possibility of claiming this low. It would be interesting. There is a battle in between CBD divergence. You got people longing the market here and a lot of people shorting the market, right? So it's a little bit of a battle right now based on CBD. Looks like that we just formed right now with this small little pump the last few minutes, some bearish CBD divergence, meaning that we could claim that low one more time. And if we do claim this low and we continue the bullish CBD divergence, we could definitely look for a little scalp to claim the highs one more time, right? So overall, depending on your strategy, I'm obviously, this is a swing short level that I'm interested in on higher time frame, and I will explain that, all right? Looking at the technical analysis, right? I will explain that right away. I want to do technical analysis and explain why this is a level of rejection. We explained it in today's video update. It's basically a good lower high, and you're hitting exactly the 50% Fibonacci from the drop from last Monday at 70K. We did see the 382 getting a reaction, a little bit of a few wicks here. Boom, a big major pullback at the 382 from the local drop. Now we are at 50%. We're hitting this high. We're getting a bit of reaction. I'm interested in this short more as a swing short position. Okay, so stop loss is so insignificant compared to the possible wins that can be 10 times more, right? If we do get that beautiful rejection in the next coming hours, right, couple of days. So it's definitely worth the speculation, right? It's trading is not about being right or wrong. Okay, it's not about being right or wrong. It's knowing the levels and knowing where to react, and just manage your risk with a tiny stop loss. If this were to start pulling back from the 50% Fibonacci, you're making a huge amount from your stop loss, right? Your stop loss is basically a seventh or an eighth of your potential profits. If you do get the rejection here, you're going to make some, 7-8 times more your stop loss, right? So it's all about risk to reward and stop loss, not about being right or wrong. On technical analysis, we look at the levels and we just manage risk accordingly very, very well. So that's what it's all about, right? Because, in today's episode, we're talking about a possible move up to get some reaction at the naked point of control. We just got a small, tiny reaction at this naked point of control, but we blasted through. We were forming consistent bullish CVD divergence. This is why CVD for me, it's basically like order flow, right? You've seen the people that are shorting and that are longing, right? And it's right now just with CVD has all of the data that you need, basically, because if you form those lower lows and higher lows, there are a lot of people on Bybit that are shorting, right? You can take a look at the order flow, you can take a look at Delta. Just on the CVD, that there is a lot of people on Bybit shorting, and on other exchanges combined, there are quite a lot of people longing at this moment. So yeah, right now you got a little bit of a battle right now in between bullish and bearish CVD divergence. But in a nutshell, guys, when you're pumping like this on the lower time frames, without a doubt, you want to look for scalp longs on the retracement, especially if you are forming bullish CVD divergence. Now, there is a level here that we mentioned in today's video update, okay? And this is why, obviously, with video updates on YouTube, it is very, very complex. Things can change very, very quickly, right? Things can change very, very quickly according to the CVD divergence. We came all the way up here. Let me just explain this major level here, which is that naked point of control, right? We surpassed that naked point of control, right? Which was sitting at 58,892. And let me just explain this because this is crucial, right? This is why putting limit orders and just going to the beach, and having basically a few beers with your mates and just not being paying attention to what's happening locally. This is why, trading can be very, very consuming without a doubt. When we hit this level, this is how things change. Look how we hit the level and we started to react at that naked point of control, okay? We got a small little rejection. However, pay attention here. What happened in this rejection at $58,900 range? As you got that rejection, what happened? We got insane amount of people on Bybit wanting to short the market at this naked point of control. And yeah, I don't want to see that. I don't want to see people shorting at the resistance, right? I want to see people longing, right? The people that long in the pump. Then you want to say, okay, there's people longing here, and this is they're likely going to get stopped out because they're longing late. However, if they are shorting at the resistance, and you can see, a lot of retail shorting, and you can see it on Bybit here. Look at this higher low. This is at 58,800, 900 range. Look at this insane, massive, bullish CVD divergence. You got a huge amount of people shorting the market here on Bybit. There's millions of dollars, in short positions entering at this naked point of control. And what can I say? You don't want to see on data people shorting, right? The people that are shorting, they need to get stopped out. So in this case, what we did find here, this is why it's crucial to analyze CVD divergence as you're hitting a resistance zone and you are rejecting. Because if you are rejecting and you're seeing massive sells here in the yellow, which is Bybit, and you're forming higher lows, it's unlikely that the price is going to reject successfully. You're just at some point going to form a higher low here and come and claim the highs. So, it is crucial to maintain to look at the data that is happening at these local levels of resistance, right? Just a little tip here, because, we mentioned this level on the video update, right? But I did explain in detail that I want to see choppiness. I want to see a reaction here at this zone. We didn't get much of a reaction. We basically just got one rejection and then blasted through. So the reaction that I do like here is right now at this level. This is looking good. This is why I'm attempting this short position, stop loss above the high. Could those highs be claimed one more time and reject based on the bullish CVD divergence that we are forming locally here on Bybit? Without a doubt, it's a possibility that you could just get that first, that wick here to the upside, and then you create that double top one more time. This is why it's crucial just to maintain good risk management, and you can get into another attempt, right? Because like I said, if you do get stopped, a lot of people are fearful about getting stopped out and all of this, right? Stop loss is part of the game. It's fees, right? It's just, you need to pay those fees. So, just imagine you get into this short position right there. You are targeting a big major rejection. This is your stop loss, right? So if you do get stopped out here, for example, and you do form another double top, you can have even a smaller stop loss based on the local double top. But the possible projection, the risk to reward is massive. And you can pay off, 6-7 stop losses, right? If this trade comes to fruition, right? If it does play out nicely, if you do get that rejection. Now, we have broken out from this trend line, all right? And if you break through from the highs and you continue the momentum, as long as you're above the highs, you're just not interested in shorting till you hit another level of resistance where you can get a reaction. This is why it's very, very complex to basically predict the top. You need to take a look at CVD. You need to take a look at the reaction. And you're better well set off with continuing the local trend for scalping. This is a swing short position area. This is a zone where the price can reject and it can come down to the lows. But if if you're looking for quick instant gains, you might just respect the pump, right? Respect the pump and get into the local bullish CVD divergence on the rejections and just continue the momentum, right? To claim the highs every single time, right? If you are looking to detect a top at a major resistance zone, right? Which I very much because it's more of a day trade to swing trade. Without a doubt, you need to see these reactions. You need to see the reaction, choppy, right? A potential another wick to the upside, hit the highs, or, this is a big reaction at this level, without a doubt. So the price is reacting to this level that was mentioned here today. And it's as simple as it is the 50% Fibonacci. We reacted to the 382 Fibonacci, just keeping it simple with Fibonacci levels, guys. We react at the 382 Fibonacci. It did get a bit choppy, but then we did get the pullback of several $1,000s with that ascending wedge, right? It ended up in a little bit of a fake out, right? It did break down. A lot of people shorting here as well that just got absolutely wrecked. You don't want to short here this at, when you're moving down. You want to short on the breakout, if anything. So you react, you choppiness, you get the reaction at the 382, you get the pullback. You're coming up to claim this lower high. You're at the 50% Fibonacci. Hey, you're getting the reaction. We are getting the reaction here. So yeah, this is a level to retrace. There is some very interesting Elliot Wave analysis. Now, of course, this is very disturbing that we have only retraced not even to the 382 Fibonacci from the pivot low to this pivot high. It is very disturbing for this to suddenly start blasting out and continuing to the upside. It wouldn't make much sense in my personal opinion, because a 3.8, you want at least a pullback from an uptrend, from a major macro uptrend, right? In this case, between Monday and Wednesday, 2 days uptrend. The pullback is very one wavy. I don't see here a three wave structure. It's very one wavy, and you only retrace to the 382. And this tells me that this pump with very low volume just has insane probability and not being a strong a strong breakout, right? So, that's what I'm leaning on here, okay? I'm leaning on that, I'm speculating on shorts, but the most important thing is your risk management here, guys. I could be wrong. I'm wrong many times, right? It's, we need to react at certain levels. Trading changes by the minute, by the second almost, depending on the data that we do have. So overall, right, let's just talk about this scenario. Now, I'm very much interested. I'm in that swing short position here on this level, and stop loss above the high. There's two scenarios here. There's two bullish case scenarios. You come back up and hit the highs and you reject. You create that local one more wick to the upside to claim the local highs, and then you start pulling back very aggressively, or you break through very successfully, right? Or you break through and you start continuing to the upside to fill that CME Futures Gap, right? We do have that Futures CME Gap, okay, which is the top is round about $62,000, right? We got that CME Futures Gap. We're basically inside of that gap. We can see it here on the Bitcoin CME, right? We are inside already of the gap. Will we manage to get that last push to the upside to fill the gap? And the question is, do we fill the gap and retrace, or do we get continuation to the upside, right? Well, we're going to analyze that scenario right away. We either reject very aggressively from here, and if we are looking at a bearish case, local bearish case scenario, because I am bullish, I would be expecting the price, if it does pull back down to sweep up these lows, I would be expecting the price to actually get a runner here, right? To find some support depending on what we form on the CVD, and look for another move to the upside, right? This is a classic lower high trend line breakout. Oh, this is extremely bullish. We're off to the races here, going well above $60,000. And then the price obviously, just creates a big fake out from this lower high resistance trend line, just because the volume is relatively low. So this is a rejection point. We are getting a reaction. This was explained in today's video update. Okay, so interested in the short, and I'm very much looking for a much larger pullback from this level as we are reacting from it. So it's worth a short position. This is why I'm in that short position, guys. If anybody is interested and you're not trading on any of these exchanges, bluffing, you do get an insane cashback 15% from your initial deposit, guys. Competition right now is just about to end. We didn't, it didn't get to very much volume. I'm actually surprised, because this exchange is gaining in popularity. We're doing pretty good, obviously, here in regarding ranking on the trading competition here. But if you are interested, you get 15% cash back from your initial deposit, guys. This is an insane bonus. I'm not sure if anybody has this high as bonus for bluffing. It's a no KYC platform, and you do have the bonus down below, guys, on bluffing. As you can see, 15% cash back from your deposit, which is insane. You get 15% back. So yeah, anyway, let's go through the technical analysis here. Let's go, and I'll go through the comment section right away, legends. I'll go through the comment section right away. However, we need to talk about technicals. We need to talk about plans, okay? What are the next major plans if we do not reject from this point, right? What if we do go to higher levels? Whew. Let me just zoom out here, because we do have the CME Futures Gap that I think a lot of people will speculate that we're going to fill the gap and then retrace if we do not retrace from these levels. But just shorted with stop loss above the high. Yeah, absolutely. Absolutely. Shorting plan is basically getting a big rejection, coming back down below $55,000. That is my plan. I'm going to go to sleep now, and then just after the stream. So I mean, stop loss is above the high. I really don't care. I might protect position and go to sleep. I don't really like having positions open when I'm, unless I'm protected, right? When I go to sleep. Of course, it's a very small stop loss. I don't want to get wicked out at break even and then the price is moving down. So, it's a very, very small stop loss. So overall, the possibility of moving down here is just very, very possible. There's a high probability. We're getting the reaction. We're hitting 50% is the level that I want to short. I'm in the short with a stop loss at, behind the highs that we just created. This is local resistance, and we are seeing the reaction on the chart. So that is enough for me to you know, pull the trigger and manage risk accordingly. No, it's really not that much to go around it. So I want to ask the community. And I'll go through. Careful shorting right now. No volume moves. Yeah, I mean, like I said, you need to be very selective with your short, and you just need to manage risk accordingly, okay? You know, if you're scared in shorting, it's because you're not managing risk accordingly, right? You're risking too much, or I don't know, you're emotional. You know, I just see the reaction, put the stop loss at, you know, at a minor loss. And if it moves down, well, I'm making, you know, 7-8 times my risk to reward, because this is a swing short level. Now, the question is, could we break local highs and fill the gap? That is what I want to know from the community, all right? Because I know you guys are traders, you guys are technical analysts as well. You know, everybody has their own opinion. I'm just a random dude on YouTube that also has technical analysis experience and trading experience, obviously, but I want to know your opinion. So let's start a poll right away and ask the community, will the CME, you know, I'm just going to put fill gap and then down, and let me know, guys, if you say yes, or if you say no, you're expecting the price to actually, you know, go to higher levels. Fill gap and then down, guys. Let me know right away on the poll. What do you think? Are we going to fill the gap and then go down? If you say yes, then, you know, that is the scenario. If you say no, then obviously I'm expecting you to be bullish, right? That we're going to higher levels. Let me know in the poll right away, guys. What do you think? Will we manage to fill that CME futures gap? And if we do not fill it and we reject from the current price levels, right, from the 50% Fibonacci with that beautiful lower high, or that order block, whatever you want to call it, that will be even better, guys. That will be even better, because if we roll down from here, all of those gap fillers, Seb, I can see you. You're a gap filler. All of those gap fillers are going to say, we need to fill the gap, right? We need to fill the gap. The gap hasn't been filled, so you would speculate that the price is going to form a higher low at some stage here at 54, 53, 52 range, right? We do have some pretty nice confluence right there. We do have naked point of controls. We do have the possibility of forming a wave 2, right? This is a wave 1. This was the low. Could we retrace down and find support? I would be happy to maintain some of the short position, all right? Obviously taking profits, but overall, I'd be happy to maintain some open just in case we do not find support here and we're going back down to the lows from Monday. But if we start reacting here, we start dancing around at these certain levels, you know, preferably sweeping up at least the higher low from yesterday, right? Which is sitting at 54,400. At least I want to see the price getting beneath this level, right? And then we'll analyze this scenario over here. We've got another naked point of control at 52,600, right? So it's just a matter of being patient and looking at the price action, seeing proof of support of some kind here. And obviously, you know, looking for, you know, just like we were having here, bullish CVD divergence, just seeing proof of support to speculate that the low is in and we're going to get a nice explosive third wave in the next coming days after the corrective move. So what if the price breaks out from the local highs here, right? What if the price moves up and it breaks the local highs at 59,900 and we maintain above the level and we do not create any swing failure pattern or anything, we do not reject from it, and we just continue to the upside? What is the most important resistance zone where we want to see a reaction, just like we're seeing right over here, right? Which is that, you know, SFP level, right? From the lower highs created from last Sunday, like we've been mentioning in today's video update. What is the next level, right? Because this is the level where I want a reaction. The reaction is there. I'm happy for the short. Stop loss at the high. We're getting the reaction. What would be the next one? Because if we break through from here, you know, I ain't going to be doing any add to the short position. I'm getting into a short right there. We have to reject at 61 or at 62. At some point, the price needs to reject. No, guys, this is technical analysis. We talk about a level that needs to get a reaction to get into the short. It is here on YouTube. You know, we talk about, you know, this is the level that I want to see the rejection. I will not short the level here if we do not get a reaction. If it just blasts through, then there's no short to be taken. If the reaction is there, yeah, I'm happy to get into that short position. In the short, let's see if we do get that pullback down all the way to, possibly claiming those lows from yesterday. So, if we do break through now, your question is, okay, where is the next level of reaction? If you are wrong with this short position and you just get stopped out from this level, which is the next level where the price could reverse? Let's go right away. I like see rejection at $80,000. Let's go right away. I can see Mariella in the comment section. How are you doing, Mariella? Thanks for joining the stream. Moonboot boy. Yeah, so anyway, let's I'll go through the comment section, guys, but I really need to focus here. Need to really focus on the education because, yeah, without a doubt, we're moving up. We're moving to this level, which is a good swing short, in my opinion. But what if we break through here? Will we feel the gap? What are the people saying? Will we feel that CME Futures gap? I'm going to say we might move down. I'm going to say no. So yeah, we got 150 votes. We see people that we're going to fill the CME Futures gap. And yeah, it's a 50-50 vote, right? 50-50. All my polls, guys, there is a lot of indecision. All of my polls that I do is 50-50. There's a massive battle in between bulls and bears always. So yeah, a lot of people say yes, we're going to fill the gap and then reject. So yeah, this is something to take into consideration, right? We're going to take a look at the CME Futures gap. Do we have more confluence? Do we have any type of confluence at the top of the gap, right? That is the question. Do we have enough confluence at the top of the gap to look for a reaction, right? Sometimes you do fill the gap, and as you fill the gap, the price moves to the other side, right? So if we can add more confluence to the gap fill, well, without a doubt, that will be better, right? Then it's a reaction zone. If we do start getting that reaction at that zone, then we can speculate on a possible short. If we do take a look at the fixed volume profile from the entire range, if we fill the gap, we are getting above the value area low of the entire range. And we know what happens if you do get acceptance above the value area low of the entire range. Well, it's a big level that has been proven to be support. And if you get acceptance back above the value area range of this massive range of the last 5 months, right? This is looking since February, right? This is almost 6 months. Hey, you just want to be cautious of the price just absolutely smashing through the level. We got a major smash here as we were getting here above the value area low, right? So, it's something that we want to be aware. You might fill the gap and you might think, okay, we could get that rejection from the gap high. However, you're getting back inside of the value range, right? You lose the value area low. Okay, that is not a good sign. You get above it, that value area low is going to maintain our support. You're back inside of the entire range, right? You're back inside of the big level of resistance, which is that support with the value area low. So, I mean, it's going to be a tricky one without a doubt. If you ask me, we fill the gap and we go down, I'm going to say, well, hey, maybe you fill the gap and you get acceptance here above the value area low and you just continue to the upside. So what is curious, and I would be happy to look for long positions. If we move up here and we see proof of support at the value area low, I'm going to say, this is maybe just going to continue to the upside. Overall, we not just want to speculate on shorts. We want to try and jump in long positions as well on the retracements, right? So without a doubt, you could get acceptance here at the low of the gap. So yeah, what if we fill the gap and we look for a rejection, right? Maybe at least to the value area low. And, you know, most importantly, I want to take a look at Fibonacci retracement from the highs from last Monday to the pivot low. Just filling the CME Futures Gap at 62K, we have the 61865. That would be in Confluence by filling the CME Futures Gap. So, yeah, without a doubt, there's a possibility, right? This is on the BTC1 chart. You fill the gap, you get resistance at the 618. It's not going to be an easy speculation short, guys, because you could speculate on a swing short here without a doubt. Without a doubt, you could speculate on a swing short. It's not going to be easy. You know, I would rather see how we hit that level, and depending on the price action here locally, guys, you know, if we do get that proof of resistance and start getting that choppy price action as we are doing here, you know, without a doubt, we could speculate with good risk management that, yes, okay, we filled the gap, we hit the 618 from the entire drop of last week, and we're going to get a major correction. But we need to hit that level because, you know, we could blast through the level. We could blast through the level. But there is Fibonacci confluence at the fill of the gap. So, yeah, you know, without a doubt, that $62,000 range is without a doubt a level to take into consideration for a resistance. Fill the gap, hit the 618, you start rejecting. Anyway, let's go through the don't worry in trying to predict it, Andy. You can't. Hey, yeah, absolutely. Higher time frames is really complex. I really prefer lower time frames looking at CVD because, you know, it's much better on lower time frame. Don't say you cannot predict it. Of course you can predict the probabilities, right? You can't predict exactly what's going to happen, but you can very much analyze what is the highest probability scenario, right? We can talk about certain levels and we know that these levels are going to get a reaction. What we do not know if they are going to get a severe pullback or it's going to finally consolidate and break through. But the reaction is there, right? We've been talking about a reaction at this level. The reaction is here. Now the question is, are we going to start pulling back aggressively, which would be a good sign? Then obviously you're in a good position. Or will you break through the highs and you just accept a stop loss, right? But we know where the price can get reacted, right? You know the price where you can get reacted. In this case here, the $59,500 range. The reaction is there. So you can predict the reaction. What you cannot predict is, are you going to get the pullback, right? Okay. Or you're going to consolidate slightly and you're just going to smash through again, right? So, yeah, I mean, of course you cannot 100% predict the move. It's impossible, right? You might get some right many times, right? But overall, getting 100% predictions is, you know, close to impossible, right? So, you know, like I said, you know, you can predict these levels. You can predict the reaction zones. You can manage risk. You know what you can predict is your risk management. That you can predict very well. You know, my risk management is in place, you know. So anyway, let's go. Moon Boot Boy, my brother, Seb. Thanks for joining. Let me go quickly through the comment section. Frank Guides, how are you doing, my man? 𝗕𝗏𝗆, the legend, is here. Shout out to you, 𝗕𝗏𝗆. Guys, if you haven't checked out 𝗕𝗏𝗆, he did an insane prediction in the Legends trading community. Also taking profits because he's a smart guy. He knows that the possibility of a fake out, but got inside of that breakout of the ascending wedge exactly as we were breaking out, right? Exactly as we were breaking out from this ascending wedge structure. Hang on a second. Exactly predicting the breakout here, getting into the trade, you know, managing risk accordingly, movement down, already looking to take some, you know, nice profits on the movement down. So yeah, shout out to 𝗕𝗏𝗆, guys. If you haven't checked him out, he is here in the comment section. Let me just get his channel, guys, because yeah, I'm going to get the channel. Anybody that is not following 𝗕𝗏𝗍, he provides insane technical analysis and alpha in his YouTube channel. He's also a coach in the Legends trading community. And you guys need to go and check him out. Okay, I'm just gonna put him here in the comment section. Make sure to go and check him out. He does insane technical analysis. Right there you have it in the pinned comment. 𝗕𝗏𝗍 trading. So anyway, let's go through here the comment section. If doing good as small profits right now. If doing good, small profits now right now, says Ghost. Is a short perfect right now? Well, we are forming those local bullish CVD divergence. Like I said, yeah, it's still holding. So we got the local bearish CVD divergence playing out right over here. So we got lower highs on price action, higher highs on the CVD. You know, this is like short, stop loss here, claim the lows, risk to reward is not huge. You get the movement down to claim these lows. You're still maintaining this higher low because you're forming bullish CVD divergence on Bybit. You know, this was a long, guys, just a few minutes ago. And this could potentially come all the way up finally to hit the highs. This is a long with a teeny weeny stop loss. This is a pretty good risk to reward trade setup that has just happened right now in the last few minutes. Yeah. Whew, just by a little, I mean, this was actually a good long position right there. This smaller reaction, stop loss at the lows, and you're claiming the high. You're looking to claim the highs. And you can actually be pretty defensive. This is a good risk reward scalp. You don't usually get these good risk reward scalps based on CVD. Usually they're not that good. Usually your stop loss is higher based on, you know, basically the higher lows that have been forming. But yeah, this has high probability in claiming those highs right now in the next coming minutes. So, but like I said, this changes by the minute. This changes by the minute because right over here, the main reason why you got this pullback from this level is because you were forming higher highs on the CVD, on the rest of exchanges, right? So it's very, very quick. This means that this low is going to be claimed. As you claim this low, without a doubt, this reaction over here, stop loss here, entry trigger here. Now you're looking for the highs. Now you're looking for the highs possibly. So yeah, without a doubt, you want to follow the momentum as well in this uptrend. Even though we're getting a reaction, you have possible high probability that you're going to get those highs being taken. So yeah, let's go right away with the comment section. Continue with the comment section. Just education as always, guys. Just education, as you know. Hang tight, Ghost, and let the chart tell you. 2-minute MACD bearish cross. Wow, I do not use MACD at all. I do not use MACD at all. You know, really only that for me, the only thing that I need is certain levels and CVD, guys. CVD is everything. CVD is where you can see. This is everything. This is a combined of, you know, footprint delta. You can see that I don't see the exact millions, but you do know when people are shorting and when people are longing, you know, on the exchanges. This is the bomb diggity of any indicator that there is out there. I don't use any RSI or any RSI, any MACD. This is, you know, where you know that people are shorting. A lot of people entering shorts here on Bybit. And you have an invalidation levels. So highs likely to be taken on that move because that is the CVD target. So yeah, CVD divergence, very, very lagging indicator. Very, very lagging indicator. Do you guys think BTC dump? Well, if we do, you know, there's a scenario here where you could claim the highs again, and then get the rejection, or break through, right? Or break through here. And, you know, like I said, you know, this is, you might get that wick, hit $60,000. $60,000 is a round psychological number. So you might get a rejection at $60,000 as you're claiming those highs. yeah, definitely a possibility. Definitely a possibility that you could just wick up here and create a double top, and then you start the retracement down. If you solidly break through from the highs, well, then obviously you're just looking at continuation to the upside to fill that CME Futures Gap, right? Let me go. Long 99.99%, says Simon. Absolutely. You want to long those bullish CVD divergence. You want to continue the momentum. This short is a swing short position zone, right? So it's like extremely low capital. You ain't looking to make fast gains in a small little move. This move is to get a big proper rejection at some point, right? You know, anybody that is here looking to add to short positions, this is going to fill the gap. I'm getting into an epic short. If you get a breakthrough here, you get back up, you fill the gap, you get a small little reaction at the 618 as you're filling the gap and you reject, but you are inside back of the value area of the entire range between March and July. And I would be very, very, very skeptical on people that are looking to get into a big, massive short, adding to the position, right? And all of that nonsense, because this could rip through. This could rip through here, guys. There is massive amount of billions of short liquidations sitting at $70,000, $72,000 range. There's over 10 billion or I don't know, 15 billion. There's loads of short liquidations. And if the price moves up there inside of the range and it gets acceptance, whew, it could just rip, guys. This is why it's extremely dangerous. I know there's a lot of people still, you know, look at the fear and greed index. The fear and greed index is still at extreme fear. What do you get with extreme fear? A big, massive pump, V-shaped recovery out of nowhere, and it blows your socks off, right? For all of those people that are bearish. You know, just as a suggestion, you know, there's without a doubt, I would not speculate on building a short position here, without a doubt. Without a doubt, with so many short liquidations here at this zone, yeah, this just, you know, I'd be extremely cautious, because then you get a V-shaped recovery. You got the classic extreme fear. Everybody's talking about massive bearishness, you know, the recession, this, that, the other. And then you get a massive V-shaped recovery. You're like, what the heck? You know, this was the recession, right? this drop, this market drop from last week was the recession, right? It's you know, the charts already make the move, you know, before the news comes out, right? It already makes the move, and you know, that was the pullback of the recession, right? Anyway, it's just you know, you get in the S&P 500 with a significant bounce right now in the last couple of days. You know, we just got a movement down. It's getting a bounce today pretty nicely. A pretty nice pump just today of 3%. Pretty nice bounce. So yeah, if we start breaking through here, there is no doubt that you could get a recovery. Just something to take into consideration, guys. There's a lot of fear right now. There's a lot of bearishness, and you know, Bitcoin could be here to surprise us. I ain't building a short position or any of that. I'm just managing risk accordingly. There's no way I'm going to get shorts here, you know, and add to position and stuff like that, like many other people do, which is just obviously not the greatest strategy, because you can absolutely burn. So yeah, Bookmap is consistently correct. There's massive amount of liquidations, guys, at 70K and 72K, right? So, you know, don't be surprised of a V-shaped recovery, right? Or even a pullback. And, you know, maybe come to the highs and then get the rejection, right? Without a doubt, I would consider selling maybe a couple of Bitcoin if we get above all-time high, guys. Without a doubt, you know, there is really a lot of uncertainty. Without it, I've been accumulating Bitcoin now for many years, and you know, I would consider at all-time high. There's a lot of uncertainty. I've had a little bit of enough. I want to cash out. You know, might sell a few Bitcoin here at this at all-time highs, because I'm very much aware of the scenario. Right, you get extremely bullish people here at the highs, and then the price just you know, doesn't manage to get momentum, and we just see another bad news worldwide, World War III, or this, the other, or you know, whatever happens, right? And we officially enter in recession in the US, which is going to affect the rest of the world. I think we are going to maintain not entering an official recession that they are going to say on media and social media. Because we have the elections, I think they are just going to do their best, print some money before we officially enter a recession that should be after the elections, be it in January, March of next year. So maybe we have that last hooray, right? That last hurrah to the upside to basically, sell some of our cryptocurrencies, right? And hopefully have a little altcoin season as well with that possible pump, right? That would be the ideal scenario because, I do really want to sell some of Bitcoin at all-time highs just because I'm very much aware of the scenario that could happen. And just a little bit, right? I wouldn't even sell 5-10% of my Bitcoin and crypto at all-time highs. Obviously, some altcoins are probably going to get a very small pump, but I would consider taking a bit of profit. I would consider taking a bit of profit without a doubt because we know that the world is in a big fat mess, guys, and we're on the brink of a major recession / depression, right? Where we do not know how severe this could be, or if we're going to kick the can down the road, another year or another 2 years, right? We do not know how the recession depression is going to come at some stage in the very near future. The thing is, will we see Federal Reserve printing money, and other countries and just saving the day, right? Saving the day, kicking the can down the road a little bit more so we can pump our meme coin bags, right? And make some profit. We've been skeptical in this, with that scenario, without a doubt. Obviously, Bitcoin is another game, right? Bitcoin, with no matter how big the pullbacks, ends up in a pretty nice recovery. But I feel that I want to take some profits. I mean, I'm sick of buying, accumulating, and just having a huge amount of crypto, and not using those gains to basically live, right? So anyway. We had one already. It says, Oriel, what did we have? Let me go through comment section, guys. Where will money come from? Well, from the money printer for new all-time high. Yeah, we need the money printer to go on. This is a big deal, right? People are broke. People haven't got money. I'm almost 80% invested in cryptocurrency, right? If crypto goes to crap, then obviously we go to crap as well, right? So we want to consider to take some profits. Obviously, I do have a bunch of USDC and USDT, which I am allocating to some altcoins at the moment with this devastating collapse. I've just been buying some Chainlink, a bit more Chainlink, bought 1,000 Chainlink the other day. I bought some DAG network, I bought some Mina, because when I take a look at the altcoins, it's like, my goodness, BTC dominance going up, absolutely fantastic. This is what we want to see. So the altcoins absolutely collapse. This is when I want to buy, right? You want to buy the altcoins when everything is down and going to crap. Because when you see this move to the upside, this is when the altcoins are just absolutely, if you take a look at the chart and take a look at, December, you will see a massive altcoin drop. Also right over here, August of 2019, where, altcoins are basically really, really down compared to the Bitcoin dominance. That is when you want to buy up, right? When everything's crashing, because then at some point in the future, you are going to get the Bitcoin dominance getting a big corrective move. You want to buy when everything's, getting bloody and it looks like they're going to crap. And when I take a look at some very good, interesting projects, such as Mina Protocol, this looks dead. This is at the lows of the bear market. It's like, hey, this is where we consolidated for several months. The selling pressure was so low that, hey, I need to buy some of this here. I've been waiting for many months. I had cash on the sidelines. I've been waiting for months for this scenario. Altcoins to go to crap. And this is where we at right now for certain good projects. I believe that Mina Protocol is a very good project. I want to buy here. I don't want to. I was not buying in March, guys. February, I said I want to pull back. I want a big major pullback, and I started buying here at the 80-90 cent level. Not gonna lie, I did buy some here. That's down 50%, but I didn't buy that aggressive. You know, it was putting just, you know, $1,000, $2,000. I wasn't buying too much. Now I'm getting more aggressive down here. Now is where I want it. You know, this is cheap. This is dirt cheap right now for good projects, right? So yeah, let's analyze here some. Yeah, we're just about to take those highs in the end. I mean, let's see if we do get the successful breakout from the highs, or we do reject from this level. Yeah, we just tap those highs. Small little, yeah, baby scalp there. Let's go right away through the comment section. But this is crucial, how CVD divergence is really part of the game, guys. For any scalper out there, CVD is the bomb diggity for your trading setups, because you can predict where the price could form a lower high at this certain range. You got an invalidation, and you also have a target zone from that movement down. And if you still continue to form bullish CVD divergence, then obviously you are, you know, you're basically looking for a long trading setup, and your invalidation is so small. It's so small compared, you know, and usually these scalping CVD divergent strategies doesn't give you such a good risk to reward, because overall, if you are attempting a short position on this one right over here that we mentioned at the beginning of the stream, your stop loss is at the high and you're targeting the low. So then, yeah, this risk to reward is not that great, right? Yeah, it's a 1.5 to 1 risk to reward. But when you got these ones getting so close to the low, these are the ones that give you some pretty nice risk to reward. You know, this is over a 4 to 1 risk to reward right there if you're targeting these highs. So yeah, it's very, very relative. When you're getting into a range, a triangle, right, and you're just looking for longs and shorts in the range, right? Range trading for me is the best. When you're in a range, you trade the range until you get a successful breakout. So let's what's happening with Ethereum? Is Ethereum getting a major dump because of BTC dominance going up? We got the BTC dominance getting some pumps going on right now. Yeah, Bitcoin dominance is on the move. It's just breaking this high that we created in April, so it is on the move. It's on the move. I think the Bitcoin dominance could actually get all the way up to the top of this channel, which is, and that would be for me the top. That would be like the ultimate level where altcoins are just gone to absolute crap. You know, even down another 30-40% from current levels, right? And that would be like the ultimate level to like get in now or don't ever get in, right? Because like we've been mentioning during the last few weeks, the Bitcoin dominance is strong. This is still in an uptrend, and the top of this resistance trend line is just round about, I mean, depending on where we hit it, if it is in August or September, round about the 60%. And we're just breaking the highs from April. So yeah, without a doubt, Bitcoin dominance could get one, you know, bit more of a leg up here, a couple of more percentage to the upside, making the altcoins bleed or not pump as much as Bitcoin, because Bitcoin is the one that's outperforming at the moment. So what is happening with the Bitcoin, with Ethereum? Ethereum is pumping. Ethereum's pumping, trying to get above this high successfully. Yeah. What's going on with Ethereum? Well, yeah, it's, I am still concerned about this move. I'm concerned about this move not being still corrective. It really all depends on Bitcoin as well, okay? You know, really does depend on what Bitcoin does. If Bitcoin gets a crap in the next coming hours, then obviously Ethereum will follow with the rest of the altcoins. Let's pump the like button, guys. Destroy that like button. I'm not sure how many likes we are right now. Destroy the like button if you enjoy the content. If you enjoy being here. Stream is lagging. Let me just check the connection here. Stream is lagging. I'm getting from someone. Bearish CVD divergence. Are we forming bearish CVD divergence? Just almost forming those bearish CVD divergence in the blue. Yeah. I wouldn't say just quite. It's probably going to be hit. Yeah, we're just basically at the same level. Not confirmed, not aggressive bearish CVD divergence, but just about almost forming that slightly higher high on the CVD on the rest of exchanges. Not quite just yet. What does CVD stand for? Cumulative volume delta. It's CVD, not CBD. It's with a V because it's volume. Solana ETF to be approved in Brazil. Are you serious? Hey Andy, great stream. Appreciate the TA. Says watch and listen. Thank you, my brother. Much love to you. Much love. Smash up the like, everybody. Watch and listen. Thank you very much for that kind comment. Ooh, getting the dump. Getting the dump. Tell you, it wasn't quite bearish. CVD divergence wasn't quite. I mean, let me just. Wasn't quite. So I think we just, yeah, almost hit the high there. It was still a lower high. It wasn't a very good. Yeah, we did not claim that high. We're just at the same level. Was not clear. Fake pump. It will come lower to 56,400, says Sushant. Absolutely, 100%. Why not? Why not? We're at this big level of resistance in the short position with stop loss. I would consider a re-entry if we do hit 60k and reject from the highs. You know, this is a moment to top out. If we do zoom in on the lower time frames, on the higher time frames, on the 1 hourly, let's get this trend line out of the way, because like I was mentioning here with Elliot Wave theory, we do have the scenario of this being a one wave or an A wave. For this to be a B wave or a 2 wave, it doesn't really matter. We did not hit the 382 Fibonacci, which is extremely rare. It's extremely rare when you get a pump and you get a corrective move. It's extremely rare that you do not hit at least the 382 Fibonacci, which is making me concerned about this movement to the upside with very low volume. Volume is decreasing. There's no power. You know, for me, this is still corrective without a doubt, guys. It's just very complex. You're getting choppy. You're getting up. You're getting up, and then, you know, you might get then that movement to the downside. But no volume. You're hitting the 50% Fibonacci from the higher time frames, right? You're at that 50% level. You're at that order block here, right? Just getting that small little swing failure pattern. You're currently above that level, but overall the reaction is there. You're at 50% Fibonacci. You know, will we cross through the Fibonacci 50%? And if you cross above 50% Fibonacci successfully, then obviously your next fib level is the 618, and there is not much resistance in between $59,500 and $62,000. There's really not that much resistance. You got the CME gap to be filled, right? No major naked point of controls. I think we don't have any daily levels. No daily levels. There's really, I would really believe that the price could have an attempt in getting back inside the value area. I mean, the value area low on its own is resistance, right? Which is sitting at $60,700 from this entire range. So yeah, there is a bit of resistance if we do get above 60k, which is that value area low at 67,700. I don't want the price going all the way up there, because then this move over here will look quite bullish. And the main reason why we cannot get more higher than the $60,000, we can still speculate that this is part of a corrective move. And you might think, how can this be corrective? This is impulsive. It's going up. What are you talking about, you crazy crackhead? Well, it's based on we haven't hit the 382 Fibonacci. It's extremely rare for a bullish trend to continue without the retracement hitting at least the 382. This is very one wavy. There's only one wave here. If this would have been a bit of something like this, then I would have said, okay, yeah, this looks good. We might continue to the upside. It's very one wavy. So this, you know, I'm in the camp that this still could be an A. This is a B, and this is a running flat basically. So we are already hitting regarding Fibonacci extension. If this were to be the top, this has to be it, because we're hitting the 1.618 extension from the A wave. This is an A wave down. If we're speculating on this being a B wave in a flat, we are hitting the 1.618 extension. This is like the max level if we are still in the camp of this being an ABC. You cannot go further up than this, because if you do, then, you know, this will be looking relatively bullish. You know, unless you're looking at this as a much larger ABC. I hate Elliot Wave theory. I hate it. I hate it because there's so many scenarios. There's the bullish, there's the bearish, there's the not so bullish, there's the most bullish one but less bearish one. You can go absolutely crazy, right, with Elliot Wave theory. You know, without a doubt, there could be a scenario that this is an ABC and you are going to higher levels, and then you get in a much larger pullback in the next coming days. The most common C target, obviously, if you do speculate on this move up, right, to you know, where if we're looking at the bearish case, looking for the price to top out at some point, well, you are looking at the pivot low here to the pivot high from Wednesday to the pivot low of yesterday, to take a look at the extension here, because you really don't want to get to the 1.618, because that will be looking pretty aggressive. Obviously the 1.618 is, it's very far away. It's at 68k. So yeah, you could technically say that yes, it could be an ABC. You're going to fill the gap at the 1-to-1, right? ABC, you know, the C wave is usually hits the 1.05 to the 1.236. Rare to hit the 1.618. That would be insane. That would be more like a third wave instead of a C wave. So you don't really want to get it much higher than $63,000, because then you need to start thinking about a possible third wave. So there is a possibility of moving up here, and this could still be an ABC. 618 is very below the 1-to-1. Yeah, I don't think this is a very shallow pullback. It's just a very shallow pullback right there. But I gotta say, it's possible without a doubt. If the price needs to pull back from, if we break through here, we're gonna go likely to $63,000 to fill the gap finally, right? But without a doubt, this is massive resistance. You're hitting the 1.618 extension from this movement down that we had on Wednesday. And if you're looking at a possible ABC flat, this is like the last level. You know, you cannot surpass this 1.618, which you are sitting at right now at 59,700. You are getting the reaction. So I think the bears and the bulls are thinking about it, right? They are thinking about, okay, what should we do? Do we have a lot of people? Do we have a lot of people retail longing? If they are longing here, then we'll dump. If we got a lot of retail shorting, well, yeah, we'll just continue the pump, right? So I think the market makers, looking at the technicals, they are thinking about, okay, what should we do right now? They are thinking about the next move, right? Which technically should be to the downside if we are going with this scenario. We are hitting the 50% Fibonacci from the pivot high to the pivot low. We are hitting the 1.618 extension. If you are still speculating right on a possible flat move, just because this retracement that we had yesterday was very shallow, not hitting the 382 Fibonacci. And if you break through from this level, I would be in the camp of, yeah, okay, there is a high probability that we can fill that CME Futures Gap. you know, and hit the 618 Fibonacci, right, from the high to the low, which is basically filling that gap. I would really not be interested in shorting unless we double top from here. You know, I'm going to wake up tomorrow morning and the price, you know, maybe has done a major pump or a major drop. I don't know. But obviously I will be defensive when I go to sleep, you know, if with any trading positions. Stream is lagging. Okay, sorry guys. Stream is lagging. Yeah, I'm going to wrap it up anyway, guys. It's very late here. Just extend the rising wedge. Yeah, also... Yeah, extend the rising wedge. Yeah, correct. We talked about this scenario. Yeah, you're basically kind of at the resistance, right, of the higher highs. You're at the resistance of the higher highs. Very interesting. Or even the lows, right? You're kind of at the lows. This is the ascending wedge that we formed yesterday, breaking out and then coming back up. You are hitting the support and the resistance when you cross them, right, as well. I mean, not much of a big deal really for me regarding trend lines, but we're at both of the trend lines of the resistance and the support from this ascending wedge that we formed yesterday, right? So yeah, I mean, you can take that into consideration as well. Have a good night, Ghost. Yeah, guys, I'm going to wrap it up. It's late, early morning. Need to go to CrossFit. I have some stables. Can we get a dip or not? Well, I mean, do you want to buy some Bitcoin or do you want to buy some altcoins? I've been shopping, guys. I've been shopping. Bought a bit of Chainlink. Bought a bit of Mina Protocol. I bought a bit of DAG. I bought a different altcoins. I've been shopping, guys. I've been shopping. This dip is to buy. Mina Protocol, my goodness, you know, I really believe that this project can do very, very well. Of course, it can go to crap. It can go to zero. Anything can go to zero. But fundamentally, this crypto project is very, very good. And we're at the lows of the bear market. I love these levels. You know, low of the bear market. Bring it on. Absolutely. This is what happened to a lot of the altcoins back in 2020, sorry, right? I don't know. The first one that appears here, this one I did catch the bottom on VeChain when we got the volatility index, like what we had on Monday, right? And you know, the C19 crash was very, very different. It was very much more aggressive, right? But the volatility index went through the levels that we mentioned on yesterday's video update, right? We got the volatility index when we get that volatile move to the downside. And this also happened back in 2020, right? On the C19 crash. Big fear, volatility index, you know, going down, all of the markets crashing. This was much a severe crash than the one that we had on Monday, obviously. But this came down to the lows of the bear market. And this is like a deja vu for me. And I've been altcoin shopping. You know, if we go lower, yes, I will take the hit on the portfolio. But I very much understand, looking at the analysis, volatility index spike, one of the biggest ones since the last 4 years to the downside. You got Japan, biggest stock market crash for years, right? For decades. Also Korea, and also you do see Taiwan and a lot of FUD. Now is when the emergency starts coming in, right? We've seen the biggest volatile move to the downside since the C19 crash. When we take a look at the altcoins that have been here in the previous cycle, they went back down to the lows of the bear market. When I take a look at Mina Protocol, for example, and many other altcoins, guys, are at the lows of the bear market of 2023. When you take a look at Mina Protocol in this case, oh, what a coincidence. We've had the biggest volatile move to the downside on the markets on Monday, just like the C19 crash. That was more severe, okay? I mean, the comparison is very, very big. We had a much more devastating collapse on the C19 crash, okay? But it's just an example on the volatility index. We haven't seen such a volatile move to the downside for 4 years since the C19 crash. And what a coincidence. Altcoins are at the lows of the previous year. This is the lows of 2023. You got VeChain coming down to the lows in 2020 of 2019. Coincidence? I don't know, guys, but I'm shopping. I've been buying for sure some altcoins because, you know, they're at rock bottom levels, and you know, this is where if you want to make money in the future, this is where you want to buy them. So did not buy on this pump. I'm saying waiting for a pullback, waiting for a crash. Got cash on the sidelines. Yeah, now it's time to go shopping. Where it looks, you know, everybody's bearish. You know, look at the you know, extreme fear index. I want to start selling when we are extreme greed, right? Could this continue for the next coming weeks? Well, hopefully we are going to see the Federal Reserve coming into, you know, and the banks being bailed out, and we're going to see the economy being saved, right? That's what we kind of hoping, right? Money print to go on so they can pump our bags. We need trillions of dollars being printed. And you know, that is the question right now. Are we at that stage in the next coming months where, you know, we got the election, we got elections in November, you know, will we kick the can down the road, print a few more $1 trillion and just pump the bags for, you know, 6 more months, or I don't know, and then get the recession in 2025 or 2026, right? The recession / depression. It's pure speculation. You know, we could definitely speculate on that, you know, a depression stage is not going to happen just yet, and we're just going to kick the can down the road another 6 months, and it's going to pump our bags. Let's hope. I don't know, guys. Dump not over. Wait for it. All right, legends, I'm going to wrap it up. Thank you very much for joining. I will see you tomorrow.